Recording in progress.
Okay. Nice. Let's get back to our class. Nice. Let's get back to our class. Okay, nice. So that's about you being, that's the advantage of you being a future trader and also a spot trader at the same time. Now let's just change the currency pair. What we used was BTC USDT. So let's just use Solana USDT. All right, nice. I like us. This is it here. Okay. So as a spot trader and a future trader, there's one particular thing that used to happen. Once you see markets moving up very, very high, after moving this high, it goes down a bit, you'll be seeing it. Then it will form more like a ranging spot. It will do as if it's ranging and then it's not ranging. But let me just save the previous record. Okay, so here now, once you see a ranging, more like it's indecisive, it's not going up, it's not going down. At this point now is another way to enter in again. If you look now, you see that here the markets have gone up, but it wants to retrace. It's more like breathe in, it wants to breathe in. Now you have to be tactical to know that once it coughs this way, it's going to change, it's going to turn up again. So you take the advantage of this breathe in, and then once it's going to breathe out, you're already in the market, it's breathing out. So you have to be very, very observant to know when the markets have gone up and it wants to shift again, to change its direction. Just like this market now, let's just take it that it have gone up for the day. These have gone up enough for the day. Now looking at this, it's indecisive here. You just have to wait a bit. But let me just get the brush. You just have to wait a bit here and see how the market is going out. For my prediction, this is going to go down further. This is going to go down further. But you have to just wait a bit and know how the market is going to go. Once you see how the market moves, you enter. So that is knowing when the market is fully up and it goes down a bit to breathe in. Once you breathe in, next breathe out, you are in. You are into the market, you just take off. So this is tactics, how you identify when to enter the market and when to get off. When to enter the market and when to get off. Very, very important. Very, 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 very important. Let me just find another tactics and show you now. Here now, looking at this particular spot, normal me, This is the particular spot that I always use to make enough money. This particular spot now. Remember what I told you about ranging markets? When you look at this spot, you see that this market went up after going up. It breathes in. So here now it's trying to range. It's gathering the momentum. It's gathering the momentum. Once it gathers enough momentum, it goes up again. So you have to identify breakouts. So how do you identify breakouts? If you want to identify breakouts, this is the tactics to identify breakouts. Now you have the level of this Can you hear me, please?
We can hear you now. We stopped hearing.
Okay, so I hope you got me at least from here when I was explaining how we identify a breakout. Where did you stop hearing me? I want to know. Now, let me just start teaching. How we identify a breakout. Now, looking at here, this market have gone up and it wants to breathe in. It breathes in. And then here we have a ranging market. So how do you identify the breakout? What you have to do is follow the last, not this highest one, not this highest one, the next low of this highest one, which is this. Just follow the straight line. Once this passes here, once it passes here, enter this market, bam. Once you see a ranging market after a very high movement and the market comes down and start ranging, that's more like it's not really going up, it's not going down, it coincides inside a horizontal plane. So what you have to do is that you just leave it and then make more like, if it's possible, draw a horizontal line with your eye and know exactly when it crosses that previous small highs high. So once it crosses it, enter this market here one time. Once you enter from here, it will move. And be very, very careful. Once you enter here, you are going to put your stop loss exactly at the center of this ranging place, because once it passes this center, it means that it's going to touch here again before it goes up again. So this is what it's going to be doing. But if it goes like this and passes this particular line and moves up again, you know that it's going to go up. So, but if sometimes you think that it's going to go up, but it will just go up and start coming down. So you have to put your stop loss somewhere here, so that even if it starts coming down, it will just hit your stop loss and you'll not really be affected by much loss of the market. That is how you identify a breakout. What is a breakout? When market is ranging, when market is not really moving up and is not moving down. It's not moving up appreciably and it's not moving down appreciably. You have to identify a breakout. More like you identify when the market is going to go high enough. Let's just take, for instance, now here. this market have gone high enough. Have gone high enough here, and it wants to rest. It wants to breathe in. Remember what I told you, don't take this high. No, take the next high that's after it. So this, you take this, make a very perfect straight line. So this high now, that's what you are going to work with. Once this market exceeds here, once it exceeds here, my dear, enter the market. So once it exceeds here, like this now, if it's me, I'm entering the market here one time. And if you enter the market, you'll be automatically favored, because once market ranges, it's going to go very, very high. It's going to go very, very high. So just imagine that you enter this market here and you follow this market from here to here. If you have $100 in your account, my brother, you'll be making another I mean, if you have $1,000 in your account, you'll be making another $1,000 already. That's the truth. And if you have up to $100 in your account and you're using 10x, you're making extra $100 in your account. So it's more like you are getting 100% increase from just this movement from here to here. No, you know, when it comes to future trading, I'm telling you the truth. How this particular trading doubles your money is very, 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 very surprising. Sometimes you have to manage, you have to imagine, how do these people make this money? But they make it more than yourself. Because sometimes you lose, that's the truth. You don't gain all the time. It's a lie. You don't gain all the time. You have to gain, you have to lose. So let's look for another ranging market. Let's look for another ranging market. Let's look for another ranging market. I think that should be the last example we'll give for ranging market. The network is a bit delaying. Okay, here is ranging enough. Okay, once you see these markets that have gone up, that have gone, that have gone, and you feel like these markets have gone up enough and you want to enter this market, you see a ranging market like this, what you do is, remember what I told you, you follow the previous high, not that one. You follow the previous. Sorry, I can't draw a perfect way. Let me just go. Let me make. Follow the previous high, which is here. So, which is here. Place a horizontal line. No. Move now. So once you place the horizontal line, this is the horizontal line. Once this passes this line, remember, this is the high that we want, but this is the previous low. Here now is the previous low. So we bring this here. And once you look very well, okay, let's just take it here now. It passed it from here. It passed it from here. But the passing is not really appreciable. But let's just take it that you enter this market just here. Immediately you see this pass, you enter this market here. And this is the center of the market. So once you enter here, you put your stop loss here and you put your profit target high above here. So somewhere here. and then you are predicting that this market is going to go up. But from what we are seeing, it will go down. So at this spot, you lost. That is it, you lost. So you don't have to be every time right. That is the truth. You don't have to be every time right. Please indicate if you are hearing me. My earpiece just went off.
Yeah,
I can
yeah,
hear
we
you.
can
I
hear
can
you.
hear you.
Okay, thank you very much for that. All right, so I think we are trying, we are making progress. So you have to identify when the market is ranging, when you enter the market. Let me tell you another thing. Ranging markets are very, very good. When market ranges, just be trying to figure out that breakout. Once market ranges, once it breaks out and you are at the right direction, you are going to make a very profitable amount. Just imagine that you figured out that this market is going to break out here, and you just take off this. You see that you are going to make a very profitable amount. So breakouts are very, 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 very good. So once you see breakouts, you try to identify, when you see ranging markets, you try to identify their breakouts. And once markets have gone up high, very, very high, you have to just wait for it to breathe in first. Once it breathes in, go in directly. Once you, okay, I will teach you more like what you use to identify, okay, once the markets have gone up a bit, okay, up to this extent, you see that this market have appreciably gone up and it's going down. Me, normally, I'm not just going to enter into this market just, now at any point here, no. With this, my MACD, this thing here is called a technical indicator. So with my MACD, I would actually know when to enter the market automatically. I will teach you the MACD now will be what I will be teaching another day. It's not really something you just teach together today. So we are just going to teach the patterns at which you enter trade. Another days we will actually be testing these patterns. You see how they work. So, but today we are just going to tell you how to identify those patterns that you see. You'll be okay that this market is going to go in, that this market here is a very good point to go in. Here is a very good point to go in. When this market is ranging, I have to avoid and actually look very well and know when to enter the market, not to just enter the market when the market is ranging. Another thing is that when market is ranging at a very high frame, let's say that market is ranging here. Let me just allow the network to come on, please. This is 4 hours candle. I want to get to, okay, let's take it that the market is ranging here. Here now, market is ranging. If you want to trade a ranging market, you go to the smaller time frame. This is 4. So 4 hours. So 1 hour is smaller than 4 hours. 30 minutes is smaller than 4 hours. So let's just take it that if you go to 30 minutes time frame, you see that thing you were seeing as ranging market in 4 hours, they are not really ranging markets. They are moving up and down. Wait, let me just do this so that you'll be seeing it very well. They are moving up and down, despite the fact that you are seeing it in a very high frame, in a very high time frame. Now, you are seeing it as if the market is going, the market is ranging. But when you come to a very low time frame, you see that the market is not really ranging, that the market is actually going up and down. So I'll actually make a video on the time frames, because I know that some people that are here are already experts in crypto trading. So they already know what time frames are. So, but I'm going to make the video on time frame and put it on our group chat. So that one, you actually know the time frames. This is 1 minute time frame. This is 5 minutes. This is 30 30 minutes, this is 1 hour, this is 4 hours, this is 1 day, this is 1 week, 1 month, and so on. We have more here. So this is 1 month, this is 1 week, this is 12 hours, 6 hours, just like that. So that's how you identify a strategic point to enter the market. 1, when you identify an uptrend. 2, when you identify a downtrend, you sell. You can actually enter to sell. When you identify a downtrend, lower lows, lower lows, lower lows, lower lows, you enter to sell. Once you see this lower low, you see this lower low. Next one you are seeing, you see this lower low, and it goes up a bit. Enter into this market here, and then it will carry you down. You sell off, it will go up, you buy again, and then once it goes down, you buy. That is how you actually know when to buy. When you are seeing a downtrend, you sell. When you are seeing uptrends, see higher high, another higher high, that is, it have tested well. Once you see this down, you enter the market here, and then it will carry you up. You get a high that is higher than the previous high, you get off and wait for it to retrace again. Once it retraces, you enter again, and it carries you up again to here. That's higher than the previous high. You get off and wait for it to retrace again. It will retrace to any place, maybe here. But then with your MACD, you have to analyze and know when to enter the market. So once it retraces here, you enter again, it will carry you up higher than the previous high. Wait for it to retrace. It retraces here, you enter again. You think that it's going to go up, it goes down, you hit your stop loss, you lose at that one. Then you now know that the markets have changed direction. It's no longer going up, up, up. It have changed to downward. So you now wait for a lower low. Nice, this is a low. This is another low. It have tested twice, 1, 2. Once you test the first one, test the second one. The next one, you're entering up here. Once it breathes out to sell. Once you sell, you are going down here, you are making profits. So that is how you sell when the market is going down. And this is how you buy when the market is going up. That's uptrends and downtrends. So markets, when the market is ranging, this is when the market is ranging. When market is at the horizontal, when it's at the horizontal plane, you actually have to be tactical and wait for the market. Once you see a very good breakout, you enter into the market once. And remember, I told you that when market ranges, they're actually gathering momentum. And once they gather momentum, they are going to go very, very high. They're going to go very, very high up. So you have to wait for ranging markets. When you see ranging markets, you'll be tactical and you wait to see when the market is going to go higher than the range. So let me say that let me tell you another tactics to actually identify when the market is going to break out of a range. When I was trading Forex, there's a particular trick I used to use. This is the trick. Let's find, okay, let me just use another pen because this place is already dirty. Coming. These two things are not really allowing me to close this chat. Oh. Come in, please. I want to close the chat, but well, let me just use this one. Please, I'm coming. Yeah, see the motherfucker. All right, so I want to use another currency pair. Another coin pair. Let's use other USDT. All right. So let's find a ranging market. Okay, let's say that here now. Let's find a very more ranging market before it break out. I think here is perfect. Here now. It's very perfect here. Okay, now for us to, oh God, these people have come again. If they end this one, we are ending for today. So for us to identify when to, buy inside this kind of ranging market, you draw two lines up and down. Okay, we'll not draw it very well. So you draw two lines ups and down from here. The previous highest high, that's where you draw the line from. And the previous lowest low, that's where you draw the line from. So we have two lines like this. Now, these two lines are the lines that okay, so these two lines now are the lines that we are going to look out for. If this is the previous lowest low, this is the previous highest high. So if this market crosses this highest high, is breaking out, it's going to break out. If this market crosses this lowest low, it's going to break out downwards. Sorry. It's going to break out downwards. And then if it crosses this previous one, it's going to break out upwards. When it crosses this, remember, you are drawing from the previous lowest one, and you are drawing from the previous highest one that you can see. So that's why it's very, very nice that when you are analyzing charts, you landscape your phone, put a landscape so that maybe you actually see the previous charts very well. So when it's that way, you draw this line from the previous highest one, you draw this line. From the previous lowest one, you draw this line. And once it passes this previous highest one, you enter the market because it have broken out. And breakout, you always test before going up. So once you see a breakout and it does this, don't really go off the market. Just come back here below this previous highest high and put your stop loss here, so that even if it comes against you, it will just come here and hit you off, and then you'll be actually maybe taking just $0.2, something like that. So that's another way to identify the ranging market and know when to enter and when to go off. Remember what I told you initially. The other one, you draw a line, or you sorry. Okay, let me just give you another example from this one now. This one is, it's break off and went down. This is a ranging market here. The previous low. Previous high, the highest high should be here. Let's just take this one. Since we are taking this low, we're taking this high. So in any way now, if this market in any way goes beyond this and hits it and still goes, do as if it's going down and go up now. If it will just do as if it's going down and then go up. Once you see this particular sign, you do as if it's going down here and each here, turn again and start going up and cross this line again. My brother, enter that market once. Once you see that signal, enter that market straight up. Once it hits, okay, let's just take it down. Market is going like this, comes down, go, come, go, do like this, hits here, and leaves this market. My brother, enter this market here once. enter this market here because it's going to go high. So it will test and go back, test and go back, test and go back. Once it tests and come back a bit and go up, enter this market once it passes that line that you are using as boundary. So that's another way to identify when the market is breaking out from a ranging market. So I think let me just try to recap the whole thing, because I think, let me not just bombard us with much things, because I really like, if you look at me, you see that I still want to give more, but if I keep on giving more, you might even forget the ones I've actually said. But I know there are some gurus in our midst that will still understand. You know, there are some people that are already trading very well, they are doing very well in our midst. And then it's just more like to enlighten them and actually for them to refreshing their trading knowledge. That's why they are here. So nice. Remember, from what we said initially, you enter the market when you see an uptrend. When you test first, higher high, higher high. Once you test the first one, you test the second one, the next one you enter. Once it goes down, you enter. It carries you up. Then downtrend, lower low. This low is lower than the other one. This low is lower than the other one. Once it goes up, you enter the market and it will carry you down. So that's how you sell. Here, once you predict that the market is going up, what you do is you buy, you are buying. Once you predict that the market is going up, you are buying. And once you predict that the market is going down, you are selling. So once this market is going up, that's your prediction. What it means that you buy somewhere here and predict that the market is going up, you buy. And if you're predicting that the market is actually going down, what you do is, I say that from your prediction here, you're predicting that this market is going down. What you do here is you sell. So when the market is going down, you sell. If your prediction is the market is going down, you sell. If your prediction is the market is going up, you buy. So let me just bring it down and tell you how to do this selling and buying. It's just more like a bit recap on the selling and buying stuff. We'll call it a day. I think somebody like me.
Okay. Yeah.
Okay.
Mr. Casey.
Yeah, I can hear you. Sorry.
So okay, so now Shebi, after some points, you might want to withdraw your money to your bank account. Abi, it's possible, right?
Yes, it's possible.
Yeah.
It's possible you can withdraw your account, your money to your account at any point. You can get off the market anytime you want and withdraw your money anytime you want, even at midnight. That's why sports is actually, that's why crypto is actually very, very good. There's a particular video I've already made. I'm going to drop maybe midnight today. This video tells you how to fund your account. But the problem we have is this. Because of the CBN rule, we cannot really fund with our credit cards. So we do Binance P2P. And for you to do Binance P2P, it means that you will need to verify KYC. And KYC takes 10 days or more before it verifies. And then the next class that we are going to enter now, we are going to enter into the actual trading. And the truth is just that everybody must have at least $10 in his wallet, his or her wallet. So for us to be trading, because I'm not the only one that's going to make the trade. I'm going to make you are going to make. So if there's any error, you see it and I will correct you immediately. So that day, more like everybody will be permitted to share screen. So if there's any mistake, you share your own screen. I will see what it is and correct you, and we keep on going. So, but then now, the only way to solve this problem is that I'm going to make a video on how you are going to verify your KYC on Binance. But because of time factor, we are going to actually use vendors, crypto vendors, people that sell cryptocurrencies. Now, nice, you can find any vendor around to actually sell and then maybe get you buy and put into your wallet. And if you feel like it's okay for you, you can send me money. I will do the P2P since my own account, I've already verified KYC because I've been using it
Okay,
before.
and then and then you can transfer to
And
us.
then I will fund it to your own wallet straight up. If that's okay for you, that's nice. Any amount you want is
All right.
okay, but it's a minimum of $10. So that is it.
Okay.
And then later I will actually make a video on how we are going to